Hey, Chi, did you call?
No, I didn't call you.
Come on, man. I know you called. I see the missed call from you.
Oh, I see now. Apparently, I pocket dialed you by an accident.
I just got off the phone with President Xi. He called me first, by the way. He wanted to make a trade deal real bad, which I knew he would.
Hey guys, let's face the reality. The market simply does not react the way it used to react to this Trump comments or Navarro comments or any advisory board comments about the deal with China. And it's quite simple. Anytime they talk anything positive, it just makes sense to short the hell out of the market. That's just the bottom line. That's what's been working. So on news like this, the market used to rally 400 or 500 points, but at the same time now we're only seeing a couple of 100-point spike on very low volume. So instead of the market doing what it typically would do, producing a huge rally, all we're seeing is just a pause. And I want to emphasize that indeed it is just a pause, because overall the market is about to spiral lower. So in this video, what we want to cover is 3 observations pointing to a further drop in the market. So Friday we've posted a few videos. One of them was titled 2755 mini crash. So in that particular video, we pointed out to one bullish thing on the chart that was actually a concern at the time against the drop. This situation has changed drastically. So the chart that was shared last week on the S&P 500, actually this is a snapshot of August 21st. I want you to focus and zoom in on this MACD formation right here. As you see, the black line is crossing the orange line on the way higher. And this is actually a bullish crossover formation, even though everything was pointed like the multi-top formation here, which produced the drop. We've talked about that in multiple videos last week, and that's exactly what happened. But the one concern we were pointing out, and not just on the S&P chart, but multiple chart, is this bullish crossover on MACD. So that was a snapshot from August 21st. Now, this is what we're looking at today on August 26th after the market closed. We're officially made a bearish crossover. So that is very important, because when you combine it with everything else that is developing here, I know there's multiple ways to look at this triple bottom. We think we easily will revisit these levels that were established in June. Now, very important is exactly to understand how to actually play this, how to structure your trade. So you definitely want to short the bounces. So any type of bounce towards the 2900 should be shorted. As a matter of fact, from our 13 markets move formula, we observed that there's a high probability of a gap down tomorrow. There's actually more than a 70% probability of the markets gapping down. The unknown factor is the magnitude of the gap down. In other words, we could just be gapping down 5-10 points tomorrow morning. We could actually gap down 30 points, okay? So the probability of a smaller gap down, considering that the VIX is sort of stuck in that range between 19 and 21, is a little bit higher. But with that said, look how consistent this observation on the MACD is, and it doesn't happen very often. That's why I wanted to bring this to your attention, guys. So in Apple on August 21st, look at this bullish crossover on the way higher. Now, you know what happened to Apple since we posted this trade to our 13 Market Move subscribers. We recommended shorting about 213, 215 level. Apple actually dropped to 200 on Friday and bounced back to the 205 level, so it actually did a little bit better than we projected. At the time we posted those videos, we estimated the drop to 205 by Monday, which is today, August 26th. So with that said, further analyzing the Apple chart now, today, after the market close on August 26th, what we're seeing is Apple, it hasn't made this bearish cross yet on the MACD, but it's certainly very close to it. When you combine all the other bearish action, which we explained in prior videos, it makes sense that not only Apple, but the rest of the market will reverse and drop from here. Do not underestimate the market's ability to actually move slightly higher first before the bigger drop. So we may see a bit of a sideways trend before a further bigger drop to that 27.55 level. Clearly, Trump was trying to maintain the markets today with some positive comments, but again, that is going to be short-lived. Now, with that said, same action in Amazon, right? A few days ago, this is a snapshot from August 20th. We were forming what appeared to be at the time a bullish crossover in the MACD. Fast forward to today, August the 26th, we're actually experiencing a bearish crossover formation. So we could see Amazon, even though it is at this huge support level at 1750, okay, and it did form quite a bit of a bullish reversal candle today, but still on much lower volume than the sell-off that took place on Friday. So with that said, expect further downward spiral in the market and some of these charts that we're showing you guys right now. The second most important observation that developed today, guys, and again, this does not happen very often either, so I'm not trying to show you 10, 15 things in this video, guys. It's a very brief video to just kind of summarize some of the key observations that don't happen very often, okay? And the number two thing for today is the bearish divergence between VIX and the S&P 500. So it was holding up actually for the majority of the day with the exception of the last 20 minutes. So the bearish divergence is typically when S&P 500 goes higher, as it was through pretty much the entire day and pre-market. So did the VIX. Well, it's not supposed to be doing that. VIX is actually supposed to be dropping. So see, the fear factor, the VIX, let's call it the fear factor, without getting into a bunch of details, the fear in the market should be decreasing as the market is moving higher. Well, today we've witnessed throughout pretty much the entire trading day exactly the opposite relationship here, which tells us that a probability of a trend reversal here, actually markets going lower, is intensified by this divergence between the VIX and the S&P 500. So considering the 27-point rise in S&P, VIX barely moved lower. It really maintained this level of above 20 pretty much the entire day, dipped in the 19 handle right at the end of the day, but still considering this bullish move, it should have dropped substantially low, but it seems to hold this level really nicely. So that tells us that a reversal in the market lower is very much in the making. Number three is the volume, guys. Stocks are up on very low volume, and we can see it across the board, right? We're not just talking about S&P 500 on NASDAQ, which, by the way, we've got both charts right here for you. So today, August 26th, as you can see, the sell-off Friday. Look at the volume bar right here. It's very easy, guys, okay? And look at the move higher today. Not only the magnitude of the move is substantially lower than the move magnitude of the move on Friday, but also the volume is substantially lower. And when you combine it with this crossover, when you combine it with the fact that the RSI divergence is still very much there, we could easily revisit the levels on the RSI getting close to this 30. So still got substantial room lower. This 29.30 handle on the RSI would coincide with the markets actually dropping. So as you can see, if you look even in the history of this chart, we had the predominant pattern has been the fact that these drops were happening on much higher volume on the red days in relation to these gray bars, which represent the volume on the up days. So that is actually overall a bearish thing. There's a ton of patterns that we can identify here, like the head and shoulder and the triple top and multi-top formations all over the place here. So when you combine all these other stuff, guys, here, everything looks very much bearish, but do not discount the fact that the market could bounce for a day or two. That is not the higher probability for tomorrow, but we could be stalling here for a couple of days before actually getting to this level because of the Trump tweets today. Now, they are not to be taken seriously by no means. So if we take a look at NASDAQ on August 26th again, you will see similar thing, okay, that the volume on the technology sector was significantly higher on the down day Friday in relation to the mediocre move higher today. So with that said, guys, if you're trying to learn how to read charts, I just kind of giving you 3 tips why the probability of the market moving lower is still very much exceeding the probability of the market moving higher from here. So you can easily target certain levels. If you're not sure how to target certain levels, if you're trying to become a better trader, guys, click the links below. Learn the 13 markets move formula, which is going to help you with that. Charts divergences and pattern recognition is definitely going to be a huge tool in your arsenal as a trader. So take advantage of these courses that we've recorded for you so you can make this year your best trading year ever. With that said, happy trading, and I'll catch you guys on the next trade soon.